Despite being the best performing sector year to date, the chartmaster says the industrials are heading for a breakdown. Carter Worth is standing by at the plaza with more. Carter, what are you looking at?
Well, kind of looking at what you just said, meaning they've maybe come a little too far, too fast, best performer. It's simply a cyclical trade, a beta trade, and it has performed in line with its attributes. But I think, take profits, do something. Put it in perspective. The various ETFs, there's industrials on top, energy, tech, of course, market down here at 17. Even if I put in the IWM, small caps, they're in here around 20. It's just too much of a V from my point of view, but let's look at some charts. So there is the ricochet. It is a virtually symmetrical after the plunge, right? This meaningful give back, and we are back to the scene of the crime. That is what overhead supply is defined as, right? And so I'm going to bet that this is going to not only falter here, but possibly falter in a decent kind of way and pay on an absolute basis. But then look at relative, and this is the real important part. So throughout all of this, in fact, when you were making a high and then attempting to make a new high, of course, relative performance poor. And not randomly, it has failed at this relative performance downtrend line over and over, and we're right here again, and I think we're going to fail yet again. Put this in a little bit of longer term perspective. This is that period of relative underperformance, but this is over the entire bull market. So you embrace cyclicality, you embrace risk and beta, and the relative performance, basically, all you got was a market performer unless you caught the initial move off of the low in 09, which is the nature of something cyclical. And so for market performance with higher beta, that's called underperformance. And what we really have here, of course, is a series of well-defined tops. I'll put in the lines. It's not inspiring, and I think if you've got great profits, you should do something about it. Trim, sell.
All right, Carter, come on over. Shelby will bring the chair in. Thank you, Shelby.
Is Carter going to appear on the options action?
He will be, of course. He's a core cast member of the options action crew. You gave him some gummies.
Nice.
Keep him through. We were having a discussion about gold and what you're saying in terms of you love it.
Yeah.
See?
Okay, so let me ask you this, because
that's right, Carter.
Easy, guys.
I know. Whoa.
Get a room.
What you're saying about industrials and the direction of industrials corresponds with this narrative that gold is signaling some sort of trouble ahead or economic slowdown, et cetera. So when you take a look at the charts, is there any sort of a correlation
correlations
between the narratives?
Are sometimes very sort of accurate and identifying, sometimes it's spurious. But I think we do know this, that the biggest story in the market right now is that 10-year Swiss paper went negative in November. Japanese 10-year paper went negative in January. German paper is flirting with the same thing, and 10-year government money in the United States is going the wrong way. This is not a positive thing. It was originally sometimes thought as an elixir for the market of reason. Now it's not. Now it's something that's bad for the market, I would think, equities. So I think gold plays into that.
Carter, back to the industrials, the XLI, really interesting chart, like you showed the symmetrical V reversal here. You know, the top two components of that have made new highs for all intents and purposes. Boeing is just blown out, and then you have, but right below that, below the top weighted things, there's stocks that act really badly, like Honeywell, like Triple M, that sort of thing. So do you want to pick on the losers, or do you just want to go for the ETF in total?
Well, so let's take the two, let's take Cat and Boeing. Boeing has really broken out in a big way. And to some extent, if there's something called latent potential, well-defined tops in a range, once you break out, you've exploited some of the potential, if not all of the potential. So Boeing's not in a position to help the industrial sector. It's actually in a position to maybe fall back. The others have ricocheted. I'm going to get a big one. I'm going to go back with the red. So the reality is that there's not a particularly individual stock that's in a very good position. There are ones that are struggling, or there's ones that have already had a lot of potential exploited.
Carter, I'm curious, when you look at the chart, is there a way to say that this is simply kind of the pause that refreshes, a simple retracement of what we've seen, or are we going to go to new lows?
Well, that's right. So then the first thing is if it's so symmetrical, was the sell-off the primary event? Or is the ricochet the primary event? Well, definitionally, the sequence is the sell-off is the primary event, the ricochet is the secondary event. So now the question is, do we test the lows? Not only industrials, but the market in general. $1 million question, I think there's every chance that we do.
All right. Thank you, Carter. We'll see you on options
Nice job.
action. I hope somebody makes a meme out of when Tim pokes the lemon lime snake into Carter's pick. Because that was...
He showed amazing restraint, by the way.
I know we have against it. It's a meme thing.
You call them memes, right?
Yeah, but is it different than the GIF? It's different.
Jif,
I don't
isn't
know.
Jif a peanut butter?
You get what I'm
Sort of.
saying.
I don't know. I mean, I'm not
Anyway.
really as cool as you are. So Boeing went from 300 to 400 in a month. That's a pretty significant move for a company of that magnitude. I actually think it's probably going to stall here. But Caterpillar is the one, Dan sort of mentioned that. You know, it bottomed out at 118 or so around Christmas Eve, got up to 138, and on a decent tape, it's right back down to 127.5. That's telling you something, in my humble opinion.